Crompton Greaves Consumer's first quarter numbers were in line with this analyst expectations. Net profits grew 18% while margins expanded by 40 basis points. Let's discuss the quarter gone by with Mr. Shantanu Khosla. He is the managing director of the company. Mr. Khosla, thanks very much for taking out the time. Could you just, we know the numbers, but anything that stood out for you this quarter?
Well, a couple of things. One is our base core ECD business grew really well, driven really by all the subsegments, fans, pumps, and appliances. Largely, all of this was being driven by new, strong innovation, which was truly consumer meaningful. For example, on fans, we had a new Aura Fluidic, which for the first time has a redesigned motor, which enables us to offer a 5-year warranty. On lamps, LED lamps, we had a truly tremendous new idea and product, which is a lamp which provides antibacterial protection, killing 85% of bacteria, which has enabled us to justify a premium, which is very important in the LED market where there has been price erosion. Finally, our cooler business, which we relaunched, Superior Desert Cooler, also had a tremendous response, almost doubling the business for the quarter. So net, we continue to believe that if we innovate, strongly innovate behind consumer meaningful ideas, advertise them strongly to build a brand, and support that with ongoing continuous distribution from our go-to-market machinery, it does result in strong results.
Let's talk about the upcoming. This is the start of FY20, and you are happy with the performance. But is this trend likely to continue? Do you see hiccups? Any hiccups that could probably slacken the pace of growth in the upcoming quarters?
Well, not really, because we believe this rate of about mid-teens kind of growth supported by gradual margin expansion should very well be deliverable across our core businesses. And even though there are slowdowns which are happening, a lot of it also in the consumer financial area, the fact of the matter is our products and our brands, our categories are really not discretionary. You can choose not to upgrade a television, but if you need a fan, you need a fan. And none of them are bought on EMIs. They're all bought, given their price points, over the counter. So we see a lot of potential. We see continued growth as we expand our footprint, as we expand our offerings over the next few quarters and frankly for many years to come.
Just, talk a little bit more about what kind of products are there in terms of a lineup that you have, because, according to the brokerage community, there's one concern, and that is a product concentration. Are you looking to diversify a little bit more and talk a little bit more about how you want to further strengthen the already strong distribution network that you have in order to maintain the market leadership that you have in a few of these segments?
Absolutely. We have really today 3 strong legs to our stool in terms of subcategories where we're strong, either leaders or number 2, number 3. There's the fans business, of course, there's our pumps business, and then there's our lighting business. So the first new category which we're really wanting to drive and invest for leadership over the next few years is really in the area of what we call small appliances, but actually is comprised of geysers, coolers, and then kitchen appliances. We've begun the program over the last few quarters on geysers and with a complete revamp of our range. And this continues to show good results, including in this quarter when geysers grew by 44% in value terms. The second is get ourselves into a leadership position from, frankly, a very small, non-existent position in coolers. And this season was really tremendous for us. So the next 2 expansions, if you will, are to build ourselves to a leadership position first in geysers, then in coolers, and then in small kitchen appliances, hopefully creating a solid 4th and 5th legs in terms of subcategories for the organization. In terms of our go-to-market, we are continuing to drive our focus on the final retail point through our wholesale channel. This involves improving data availability. We've invested a lot in application software, handhelds, to make sure data is available to us and to our field force so they can take better decisions to serve the customer. It also includes getting into smaller towns, because our category in general, not just us as a company, is relatively limited in its presence in, below 1 lakh plus towns or 50,000 population and below towns. So we've got a whole program of what we call rural expansion into these smaller towns. So it's all about getting wider and getting deeper, leveraging data to enable us to do that effectively.
One last word, Mr. Khosla. The street is factoring in an FY19 to FY21 estimate CAGR on revenue, EBITDA and PAT of about 12%, 13% and 19% respectively. Is that reasonable and achievable, maintainable?
Yes. I mean, that would definitely be within the realm of what we are aiming to deliver, because, like we've defined our objectives quite consistently, we want to grow our top line in terms of revenue faster than the market, and we want to make sure that we grow our bottom line at least as fast as the top line. So to do those things, we need to grow at the levels you're talking about.
All right, Mr. Khosla, thanks very much for joining and really appreciate you taking out the time, and all the best for the upcoming quarters as well.